All right, good evening everybody and happy Friday. We made it to the end of the week. Hopefully everybody is having a good one so far. It is September 16th, 2022, and on last night's stream, we were talking about the 14th anniversary of the Lehman Brothers collapse. So if you want to see a full recap of what led up to the collapse, quick overview of the subprime mortgage market. We also reviewed in depth those very toxic derivatives, so those collateralized loan obligations and debt obligations. But tonight, it is a new night, which means it is a new topic. So tonight we're going to be talking about the housing market a little bit. Now, we are seeing rates for the first time since 2008 rise above 6%. So as I was on bankrate.com, as of today, Friday, September 16th, 2022, the average 30-year fixed rate mortgage is right at about 6.25%. So if we sort of break that down conceptually, in comparison to this time last year, let's say if a particular borrower was looking at purchasing a house for $500,000, okay? They put 20% down in the house with a 3% interest rate. Over the life of that mortgage, they would roughly pay about $200,000 in interest over 30 years. But now, fast forward a year, Federal Reserve has raised interest rates, that 10-year US Treasury yield is up. If you wanted to buy the same exact house, 20% down with a 6% mortgage rate, that's going to bring your total interest over the entire course of the loan to about $465,000. Now, here's what I think. Prices have not yet come down, but I think prices are going to come down. And mortgage rates being high isn't necessarily the end of the world, and we are going to talk about that. We're going to talk about some of the tax advantages to real estate as well. We are also going to be talking about a big deal on Wall Street that closed. Yes, Adobe, ticker symbol ADBE, purchased Figma for about $20 billion. Now, it's crazy because I believe this company only does about $400 million in revenue a year, and they sold for $20 billion. So we'll talk about some valuation metrics there. But first of all, congratulations to anybody who was taking part in that deal. Always like to see people succeeding. And lastly, we're going to talk about bond market, interest rates. That 10-year US Treasury yield rose again today to about 3.455%. We are starting off the stream in the office tonight. I'll give you guys a quick look outside. So we are Broadway and Canal Street. I'll give you guys a quick peek outside so you can see. So this is looking all the way uptown on Broadway. You can see all of the street vendors here on Canal Street. But tonight we are going to be walking through the San Gennaro's Feast. But first, I just have to close the window, put away my laptop, and we will say hello to everybody in the chat. But happy Friday to all of our viewers. And I'll be right with you in a minute. And we will head down. Ooh, finally we are done. Looks like we're ready to rock, ladies and gentlemen. Thank you for joining Walks on Wall Street tonight. Let's see who we have most importantly. I gotta say hello to the team. Denise, New York City is here, says, hey Tom, Otto is here. Good to see you, Otto. I see Felix, Austin City Limits, British Gray. Welcome, British Gray. The one and only ABX girl, good to see you. Welcome. Yeah, I'll show you guys the kitchen. I think I've showed you guys this many times already, but this is sort of like the common area. So you have your coffee, your snacks, all that stuff. Hey, Paul Greenwell is here. My best friend, Ryan Royal. Ecom Warlord is here. The LT Prod, Charlie Richardson, and Dan Zhang. Says, hey Tom, can we see the kitchen and the office? Yeah, so this is, I guess you can consider it a kitchen, right? We have a refrigerator. So this is at one of the WeWork offices. So you have your coffee machines, coffee makers, all that stuff, your mugs. I think we should have some tea here. So if you want to grab some tea, whatever you need. But yeah, this is it. This is it, crew. This is it, team. You know, one of my favorite things about these type of WeWork offices are these miniature phone booths, if you will. So these are totally soundproof. And if you take a call in there, nobody can hear you. You could be as loud as you want. Hey, Mike C says, WeWork is such a great deal. R2D2 is here. Good to see you, R2D2. Yeah, the ABX girl says, plus you're near a lot of food, so we got to push to exit. We will pull this, and man, what a busy day at work. As we wait for the elevator, Quinn is here. What's up, Quinn? All right, team, I'll see you on the other side. Hopefully we don't go out. Dan is like, have you ever slept in the phone booth before? Not in the phone booth, but we have slept in the office before, grinding it out. Carol Williams, good to see you. Chris Beemans is ready for the weekend. Welcome, Chris. Jay is here, says, good evening, Tom. Hope you're doing well. Thank you so much, Jay. Always a pleasure. All right, so team, now we are going to head out. So the markets closed down across the board, the NASDAQ, the Dow Jones Industrial Average, and the S&P 500 all closing down. However, the good news is we actually saw quite a bit of buying activity into the close across the, I would say across the major mega caps, right? So if you think about Alphabet, Microsoft, Amazon, and yields seem to be topping out. You know, we may not have a top in yields, but I think we could see a little bit of a rally day on Wall Street on Monday. Obviously, the big talk of the town next week is the FOMC meeting. We will be hearing from Fed Chair Jerome Powell, probably going to raise interest rates by 75 basis points at the September 20th to September 21st meeting. Hey Jay, this is Tom. I got my iPhone 14 Plus today. Very nice. So Jay, I was on Twitter today, and I keep forgetting this guy's last name, and I don't want to mispronounce it. But he is a CNBC anchor, which I watch all the time. I watch him every day. But he tweeted something that was really interesting, and it was actually kind of funny. So supposedly across the United States, there were really, really long lines of people waiting to get the new iPhone. Now, the tweet went something like this. It was a picture of a massive line. I believe it was at the Fifth Avenue Apple store today. I'm not too sure. But it was, what a very strange recession. And at the end of the day, I mean, it's kind of funny because even though technically, beautiful Tesla taxi here, 10 out of 10 on that, even though we technically are in a recession as we got those 2 negative GDP prints, I mean, it's not usual in a recession that we see people lined up down the block and around the corner to buy iPhones. So R2D2 says, tell my son Daniel good night. Good to see you, Daniel. Thank you for watching. Hopefully you have a fantastic night. Ren1018 says, good evening, Tom. What's up, Ren10? Well, I hope everybody had a good week. Hope everybody finished the week strong. This week absolutely flew by for me. You know, and I actually ended the week on a very, very good note because a lot of my customers finally came through and paid me, which was good and very unexpected, by the way. So just to give you a little bit of context here, usually if you're dealing with large enterprise customers, hold on, I want to get one more shot of the Tesla taxi. I think I'm obsessed with Teslas, I believe. So usually when you're dealing with large enterprise customers, they actually don't pay you for the product up front. It's actually usually I do like a net 30 to net 60 terms, but it almost always goes way beyond that for whatever reason. But that's how the world works, right? If you, let's say if you're Best Buy and you're buying or you're bringing in refrigerators to sell to your customers, you're actually not cutting a check to, Samsung or whoever. You have terms, right? So you take delivery of this stuff beforehand. So surprisingly, I actually got all of my receivables and all my payments today from every single one of my customers, which was extremely unexpected, which definitely helps out a lot. Now I could be more aggressive to close additional deals for the end of the quarter. And the reason why I think, and this will tie into the topic for tonight's live stream. Usually companies are establishing their budgets for next year, so for the next fiscal year right now. So usually late September, October and November, they will solidify budgets for next year. So they usually tee up a lot of the financials now. And I think we're going to start to see that a lot in next earnings season, especially at a lot of these software companies. Are a lot of their deals closing? Are their deals falling through due to their customers changing their budgets? So it's something we'll have to keep an eye on for sure. Hey, War Walker's here. Welcome, my friend. Says, I need a new refrigerator. Well, War Walker, not for nothing. I really truly believe that you will be able to get some pretty good deals here, probably in Q1 and Q2, because, as we've been talking about on the streams, one of the things I think we'll see is inventories continue to build here. So during the pandemic, what happened was inventories were so scarce. So what happened is a lot of the procurement teams at these big companies started to just buy as much as they could because they didn't know if they could get product. But now, as we've been reviewing on Target's earnings, Home Depot's earnings, Lowe's earnings, inventories are actually building quite substantially across the board in all categories. So I think you're going to start to see some prices being slashed here, and hopefully that'll also help out with inflation. All right, team, this is Baxter Street and Canal Street. I'm not sure if we're going to walk through the San Gennaro's Feast because it may be too crowded, but we'll see. Hey, the ABX girl is here. Good to see you. Wish Chris Carr says Samsung fridges have the worst ice makers. Avoid them at all costs. I think I have a Whirlpool refrigerator, I think. Dan Zhang says just wait till Black Friday. It's only a few months away. Yeah, that's true. That's a good point. Just Barry is here. Hey, Barry, good to see you. Chris says, hey, everybody, hope all is well. Thank you so much, my friend. I'm doing very good. Kathy Lyons, good to see you. Yeah, Brick Stonewall says unexpected money is always good money. That's true. GM Workstations says the end of the day rally burned me today. Yeah, so even though, and I posted a Twitter thread on this as well. I put out a Twitter thread that the main caption, I guess we'll cross the street over here. The main caption of the Twitter thread was a gentleman riding, or at least trying to pedal a kayak up a river. And the theme for that Twitter thread was, it's sort of the same thing with investing in the stock market, especially if you're running a portfolio of individual stocks. And here's what I mean by that. If you are trying to paddle a boat upstream, it's going to be very, very difficult for you to make any progress up that stream. Now, if all the major indices like the NASDAQ, the Dow Jones Industrial Average, and the S&P 500 are all in extremely sharp downtrends, and you're trying to go long individual stocks, well, if you look at the statistics, usually about 7 out of 10 stocks will just follow the overall broader trend of the market. So for anybody who follows Can Slim, which was essentially Investors Business Daily, which was now acquired by News Corporation and the Wall Street Journal, you increase your risk exponentially by buying individual names when the broader market is in a downtrend. And right now what we're seeing is the NASDAQ, the S&P 500, and the Dow Jones Industrial Average are all well below their respective 50-day and 200-day moving averages. But to Workstation's point, we had a pretty nice rally day into the close. So even though the indices still closed in the red, we had a nice rally off the bottom. And I think that may continue for a couple days next week, especially if you pull up a chart of the 10-year U.S. Treasury yield, the 30-year. It seems as if if rates may come down a little bit. But if you want to look at that Twitter thread, you can follow @WalksWallStreet on Twitter. So we are standing outside the San Gennaro's Feast. This is on the corner of Mulberry Street and Canal. And look at how many people are out tonight on this beautiful Friday night in New York. It's actually not too hot. It's probably about maybe 70 degrees. Hey, Dan Zhang, says Tom, I've recently, let me read your comment up here. We got a lot of people. I'll show you guys the fruit vendors here. I actually bought something from these guys today. I bought a mango here. Dan Zhang says, Tom, recently I've realized that although there are so many technical indicators, 200-day moving average is still the king and the simplest. Yeah, I agree with you, Dan. So the reason why I use the 200 is because Paul Tudor Jones and Stanley Druckenmiller generally says, look, if the general market is above the 200-day, I think they, generally speaking, if the general market is above the 200-day moving average, it pretty much solidifies that the general market is in an uptrend. But now, if you look at the broad-based indices, we are well below the 200 and the 50, and the bond market is really, really signaling some trouble here, which we'll talk about. Hey, Garrett is here. Good to see you, Garrett. Thank you for joining. Gerardo says, happy Friday, mi amigo. Thank you so much. Happy Friday to you too. Hopefully you had a great week. Sally is here. Dusty Cole, my good friend, what's up? Sunshine after rain. We have photos from around New York. Our fantastic moderator, Big Task, says, Tom, what do you think about a reverse mortgage? I'm not a fan, to be honest. I would stay away from all that stuff, in my opinion. Hey, Mike says, hey, Tom, I enjoy your live streams. I by no means am well versed in stocks. I become Forrest Gump when talking about it, but I love learning and joining in your streams. Yeah, I appreciate it. Yeah, I think it's a good, the streams are awesome to, have open discussions, share ideas. So a pleasure to have you here, Mike. And I appreciate you joining the crew tonight as we walk through Chinatown. So I have a quick update for Dan Zhang. So I took a break and I actually went to the boba place here, the bubble tea place. And it was about a 9.7 out of 10. It was fantastic. I went to the one right at the end of the block here. Hey, our friend Western Mass Dave. What's up, Dave? Good to see you. Iris Lou. Hey, Bill Tao, thank you so much for the 200 mechs. Thank you so much, my friend. Bill, you are way too kind. And thank you for supporting the live streams. So, Bill, what do you think about this? One of my favorite things about Chinatown is all of the fire escapes here. Oftentimes they'll actually hang the paper lanterns from the fire escapes. But they look really nice.
Literally.
As we make our way deeper into Chinatown, you guys will see what I'm talking about the paper lanterns. Donna L says, hey, Tom from Northeast Ohio. Good to see you. So, Donna, I was reading an interesting article today in the Wall Street Journal about fertilizer. Scott's Miracle Grow and the like. and they're having a lot of troubles with inventories as well. So what they saw during the pandemic is a huge shift in consumer behavior as it relates to their fertilizer business. And I think it's, in hindsight, it's definitely quite obvious, right? Because as everybody was forced to stay home, many people started to migrate to the suburbs. Maybe they bought a single family home out in the suburbs, and then they're gardening and planting flowers and things like that. So fertilizer sales skyrocketed, and I believe about 40% of all of these sales of Scott's Miracle-Gro comes from Home Depot and Lowe's. So there was a little bit of a lapse in forecasting though. So they're actually in a little bit of trouble because inventories have built so much, and they invested so much into building more factories, building additional plants and the like, and demand is really materially been cut here, especially as we've reviewed earnings reports from Home Depot, Walmart, and Lowe's. And I think another thing is usually right around Memorial Day is when Scott's Miracle-Gro gets the vast majority of their bulk orders. And I think the big box retailers are trying to run a little bit asset light right now. So it's usually they'll bring in a little bit of inventory, sell it, then order a little bit more, just so they don't run the risk of being caught with it. And I think one of their main factories is based out of Northeast Ohio. I think that's where their main headquarters is, if I'm not mistaken. Beautiful Tesla right here. I think this one is my favorite. I think this one has the gull wing doors. Here now, it says sell to open, 20 contracts, put ticker symbol Croc, strike 60. Oh, is that the position you're in here now? Well, good luck. Good luck. Hopefully you make some money. Mike C says, Tom, what do you think about the FedEx dropping 21% today? Yeah, so I think FedEx reported a really bad quarter. Well, let me rephrase that. I don't think they reported a bad quarter. I think it's just their guidance was really bleak and abysmal. I think the CEO actually came out and said that they see a really big, deep, and long looming global recession coming on the horizon here. And that demand is set to fall off a cliff. So I don't think it was so much the earnings that were bad, it was the guidance. But as we talk about on the streams all the time, sometimes what moves the stock is not necessarily the earnings, it's the forward guidance, right? Because as an investor, if I'm looking to make an investment, sometimes I don't really care about, well, I do care about the earnings, but I care about what the company is going to earn in the future if I'm buying it now. So definitely not a bullish outlook there at FedEx. GX72 says, yes, Tom, that's a Tesla Model X. Love the Model X. Tess is here, says, hey, Tom, what's up, Tess? Happy Friday to you. Genesis Scott's is a huge pillar for Home Depot Garden Center, and they have their own vendors to manage the inventory and keep organized, says Jenna. Yeah, and now they're having a really, it was a really good article. I'm not sure if anybody maybe gets the Wall Street Journal or maybe have the digital version, but it was pretty bad. It was pretty bad. So I quickly have to point out here, so on the corner of Bayard Street, right, I guess you can call it adjacent from the Manhattan Bridge, this is my favorite noodles place. It's called Great New York Noodle Town. It is just newly renovated, so if you are visiting New York City, this is definitely a top recommendation, and it's quite affordable too. Now, it used to be cash only. I'm not sure if it's still cash only, but it used to be cash only. Luke says, I'm from Manhattan and love your videos. Hey, Luke, thank you so much for watching, my friend. We're in Chinatown tonight. We were talking about the housing market. I think as of today, September 16th, or is today September 15th or September 16th? I think it's the 16th because yesterday we did our Lehman Brothers live stream for the 14th anniversary of the Lehman Brothers collapse. We talked about that disaster with the we sort of did a deep dive into what credit default swaps were, how they came about, how mortgage-backed securities came about, and things like that. But yeah, as of today, the average rate, and this is according to bank rate, by the way, and I know that rates can fluctuate depending on who you get the loan from, but the average 30-year fixed rate mortgage today was about 6.25%. That's huge. It's over 100% year over year. So a lot of people are worried about the housing data that we're getting, because if we think back to existing home sales data that we got last month, a lot of people were like, look, existing home sales are down for 6 months in a row, but prices are actually going up. Why is that? Well, we talked about liquidity, and we talked about how equities tend to re-rate a lot faster than real estate, because hold on, we'll just get away from this in a minute. Because if you think about it, if interest rates go up, traders on the street can price that in relatively quickly, because equities are a very liquid market. That's why we saw huge steep declines in the equity market. But in real estate, you have to list the house, you got to show the house, people have to walk through, people have to make offers, things like that. So I think in Q1 and Q2 are when you're going to see the price declines. Now, I don't think it's going to be cataclysmic, but I think you're going to see price declines. Now, I think on a month-over-month basis is what I really like to look for. Usually when you get existing home sales data, the big headlines on CNBC, CNN Business, Fox Business will always look at that year-over-year number. And the reason why they do that is because they want to get clicks, which I understand. So the year-over-year number is still going to be massive. I think year-over-year existing or average home prices were still up about 10% year-over-year, maybe 11%. But if you want to try to identify a new emerging trend, you got to look at the month-over-month numbers. But if you would just publish an article about month-over-month numbers, if it says, month-over-month, the average home or the median home price in America declined 0.1%, it's really not going to get a lot of those clicks. So I think we're starting to see prices come down here. So if you're a buyer, especially a first-time home buyer, I think you're going to get some pretty good deals, or at least have a position to negotiate in Q1 and Q2 of 2023. This is my favorite Chinese restaurant here in Chinatown, 456. The exact address is 69 Mott Street. And I actually went here again today. I think this is the third time this week I've been here, but it's that good. So I'd recommend that as well. Hey, I see Andy is joining us from South Korea. Good to see you, Andy. Hope all's well with you. I think it's already Saturday where you are, so hopefully you're enjoying your weekend. Good to see all of our Korean viewers. Welcome, everybody from Korea. Eric is here. Good to see you, Eric. Molly Duran is here. This is true. Good to see you, Molly. Oh, Grand Street 1. This is 21 Mott Street, my all-time favorite old school Chinese in New York City. 21 Mott Street, where's that? I'll have to check it out. Oh, let me, so if that was 69 Mott Street, it's probably up here. But check out the architecture of this building here. It is right on the corner of Canal Street and Mott Street. And this thing is beautiful. Hey, Brevard County Real Estate, what's up? Hopefully you're having a good Friday and you had a good week. My friend Brevard County Real Estate, good to see you. So Brevard County Real Estate, we were just talking about existing home sales data. But here's the good news, right? And so a lot of times, and obviously we just reviewed this, many of the mainstream financial channels will really focus on that year-over-year number just because it's going to be a bigger change. But if you really want to identify an emerging trend, you got to look at the month-over-month numbers. So here's an interesting statistic for you all. So in the 4 weeks ended September 11th, homes on average sold for 0.5% below their asking price. So I'll say that again. So for the 4 weeks that ended September 11th, on average, homes sold for about 0.5% below the ask price. Now, if I were to say that this time last year, nobody would have believed us, right? Because many times, especially last year, we were reading stories about people doing really, really rookie mistakes, like making offers well over asking and waiving all of the inspections. So that is what I believe a pivotal point for an emerging trend that real estate prices are going to go lower. Now, I'm not calling for Armageddon, but I think you're going to probably get a good deal and not have to worry about outbidding multiple people. Oh, this is 98 Mott Street. This sort of looks like an indoor mall. Hold on, I'll show you guys. This is 98 Mott Street. Hey, Kevin Ramsey says hello from Cincinnati, Ohio. Hey, Kevin. First name, last name says so dope. Good to see you. Brevard County Real Estate says, Tom, like politics, all real estate is local. That's a really good saying, actually. I think you have the comment of the night so far. Yeah, Western Mass Dave, we see One Vanderbilt in the distance. So if you look all the way up here, you see One Vandy. Neil says hello from Durham in the UK. Excellent picture and sound quality. Well, thank you so much. Wishing you all the best in the United Kingdom. Now, we did also have some big news on Wall Street in the M&A space with Adobe buying a particular company by the name of Figma for about $20 billion. And that's a pretty significant deal. I mean, if you look at the valuation, right? Now, before we sort of go into that, I just want to say that, or a huge congratulations to anybody that was involved in that deal, especially for the employees of Figma. That is fantastic. There's going to be a lot of people walking away really, really happy. And I'm super, super happy for anybody. You know, anytime we see somebody winning big, that puts a smile on my face, especially in these markets. So Adobe acquired Figma for $20 billion. However, the last funding round that Figma went through valuated the company at about $10 billion. And I believe their total full year revenues are about $400 million. So it sold for about, or 1/50th of the sale price. So talk about a massive, I mean, some people would say that it's a bad move by Adobe. I'm not too well read up on the company to say otherwise, but supposedly Figma was making a big advance into eroding or eating away at a lot of the existing customers of Adobe. So you have to make that decision where if you can't beat them, you might as well just acquire them or buy them, right? Wow, the Little Italy is super packed today for the San Gennaro's feast. We'll see how busy it is, and if it's too busy, we'll head out. Wow. Hey, John.
All right, everybody, one more time. When the moon hits your eye like a big pizza pie, that's so cold.
So I think this is going to be going on for about 2 weeks. I think it ends next Sunday, or next Sunday evening, I believe. Wow, there's a lot of people here. I would have not, more people than I expected. Wow. Dan Zhang says, Tom, do you think Adobe overpaid? In this climate, I think they did. But at the end of the day, I mean, I'm sure Adobe did a lot of diligence. It probably, I mean, definitely a lot more diligence than I did, so. Well, here's why I think it sold for so much. And this goes back to traditional enterprise software valuations. And one of the most lucrative things about a software company is the gross margins. And I think they have about a 90% gross margin, which is just ridiculous. So I sort of make the comparison to, you know, Tesla having about a 30% gross margin. And if you look at all the other automakers, you know, their gross margin is single digits, maybe. So I think investors are going to pay up for higher profitability, higher margins. And that's one of the main, I would say, magic elixirs that we always look for is earnings, pre-tax, after-tax margins, return on equity. But I mean, they sold for 1/50th, or their revenue is 1/50th of their purchase price, which is a lot. Hey, Iris is here. Good to see you, Iris Lou. I don't smoke, so I really wouldn't know. I think we're gonna head out on the other side. Hey, Golden's Dawn, welcome. Good to see you. Yeah, just Barry. I think it's too crowded for me too. We may have to make a right at the entrance here. It is good to see everybody out though. I mean, you would have never seen anything like this during the pandemic. So it's good that everybody has recovered at least. So that's good news. Yeah, I'm braving the crowd for you guys, for sure. Tiffany Allen, good to see you. Hopefully you're well. The RT440 says obviously New York is not dead. I agree, it's definitely not. I think this is the second day of it too. Yeah, that's true. I think we're gonna make a right up here. Yeah, let's make a right. June is here. Good to see you, June. Here, I'll give you a look over here. Hey, Marjan Worldwide. What's up, Tom? A sausage and peppers is a must. Yeah, I may come here tomorrow when it's less crowded. I think it's really crowded today because it's the first day.
Each name, but they were great.
So let's continue to walk. We'll go 2 avenues over and get out of the crowd, and then we will go all the way up to 1 Vanderbilt area, which is near 42nd Street. Wow.
What's going on here?
Looks like there must have been concerts here or something. Yeah, Zay Batatas is Adobe financially overpaid, but strategically it was the right move. I mean, that's what a lot of people are saying. At the end of the day, a lot of those very, very high growth software companies will tend to sell for a premium because their gross margins are so high. You know, a 90% gross margin is high. You can see the Empire State Building all the way in the back. Try to walk up this way, see if we can get out of the crowd. Is that what they're called? They're called slingshots? I didn't know that. There's so many of those in, what's it called? Miami. There's like 1,000 of them. All right, team, I think this is a little bit more my speed. Not a lot of people. I'm not too much of a big crowds guy, but it looks like a blast. So if you guys are in the neighborhood, definitely check out the San Gennaro's Feast. But obviously, I think tonight may have been the first night, or yesterday may have been the first night, so probably a ton of people. Judy is here. This is stay time. I don't know if I can withstand it.
It's 9:30, bitch.
Oh, Dan Zhang says, Tom, events like this make me wonder how often do you get copyrighted? We usually get copyrighted every night, but it's not too big of a deal. Hey, here now, this is Hello Walks from Wall Street. This is for your COVID booster shot. You may need it after the crowd, just jokes, have fun. Here now, I appreciate that, my friend. Thankfully, hopefully I'll never go to a place where they charge me for a COVID booster. That would be a very janky place. But I appreciate it. Here now, thank you so much for the donation. I much appreciate it. And I appreciate the support. Thank you so much. Iris Lucis, Tom, tomorrow is National Museum Day. So I think today may be Mexican Independence Day, is that correct? So happy Independence Day to all of our Mexican viewers. When I look at the YouTube analytics, I think we have about 5% of the audience that watches from Mexico. So hope you guys have a fantastic Independence Day with your families. So one of the things that I noticed about today, hold on, let's get out of the crowds here, we'll walk up. So one of the things I noticed about today and this week on Wall Street, and I sort of wrapped this up in a Twitter thread that I sent out to everybody right at the close, and that is the importance or stress about the importance of following the broader trend of the market. And what I've been seeing right now, especially as I've been talking to a lot of my friends who, either manage quite a bit of money or work at specific hedge funds, the ones that have been doing well this year are the ones that really haven't been doing anything. So this is what I mean by that. And what I mean by doing well, it doesn't mean making money. the people who are doing well this year are the ones who are not losing it. And I think if you get too sort of jumpy and trigger happy, as I like to call it, that you need to buy or you need to trade something every day, I think you're sort of missing the point of the main rule of following the broader base trend of the market. Because on the thread, what I posted was a picture of a particular person kayaking up a very, very, I guess you could say, trying to kayak upstream, and the guy wasn't really making any progress. And I think that translates well to the broader based market, because if we understand the statistic that roughly 7 to 8 stocks in the market will follow the overall general trend of the market, which means if the S&P 500, the Dow Jones Industrial Average, and the NASDAQ are all in uptrends, that'll give you a higher statistical probability of your individual stock selection. So if you're trying to buy individual names here while the market is in a screaming downtrend, your odds of success are rather low. And what's even more concerning is if you think about the fact that the S&P 500 weighted index, that really means the vast majority of the weight of that particular index is geared towards the top 10 stocks by market cap. So I think right now Apple makes up about 7% of the indice. I think we made a mistake by coming down here. So Apple makes up about 7% of the broader based indice. Then I believe it is Amazon, Alphabet, Microsoft, Johnson & Johnson, Berkshire Hathaway, and the like. If those stocks are getting clocked in a screaming downtrend, you could pretty much, gauge the direction of the general market. Because if you have a 7% weighting, if Apple has a 7% weighting in the S&P, and Apple's in a screaming downtrend under, ooh, look at this. These are all cannolis and really good stuff. It actually looks really good. If Apple has a 7% weighting in the S&P, and Apple's in a screaming downtrend, and it's getting clocked 3 to 4% a day, sitting below their moving averages, well, you can pretty much guarantee that the general market favor is not in your sales. So I think one of the best things to do during times like these are just sort of sit tight, right? You don't need to be making any sort of hero trades. If you do see a particular setup in a company that has exceptional earnings growth, fantastic pre-tax and after-tax margins, maybe only risk about, 0.5% of overall equity, right? Because if you're going out there and you're committing, 10% of equity to a particular idea, when all of the major indices are in screaming downtrends and below all of their respective moving averages, if you lose 7% on your 10% equity and you do that 3 or 4 times, you're having a bad year and you're really destroying your equity curve. So definitely pay attention. If you want to see that thread, you can just follow me on Twitter at Walks Wall Street. I know John's like cannolis are delicious. I think I'm gonna come back here tomorrow, maybe in the afternoon when things are a little less crazy. I'm gonna check some stuff out. But a lot of stuff looks really good there. Yeah, Golden's Dawn says, love the cannolis, the ones you just passed look delicious. Dude, I'm tempted to go back, but I'm gonna do that tomorrow afternoon. I'm gonna come back. At night is crazy amount of crowds tonight, which is good. So that's another thing. Do you think we could use this as a proxy for the overall broader-based economy? Because San Gennaro's feast was absolutely packed. And one of the CNBC moderators, I guess you can't call him a moderator, newscaster, I'm so used to saying moderators because of the live stream, posted a photo on his Twitter of the line of the people standing outside of the Apple store waiting for the iPhone 14. And the caption was, "This is a very strange recession." And I think it is too. You know, we had 2 consecutive quarters of negative GDP growth. But if you look at the consumer spending habits, they're actually relatively strong still. You know, in 2008, I don't think you would see people lining up down the block at an electronics store. So maybe potentially we could use this as a little bit of anecdotal data. I don't know. People look like they're out spending. Slaps is people willing to blow their money now that they have to lose 20% from inflation. Yeah, I mean, maybe. I guess. You know, inflation's about 8.5%, but I definitely do see your point. You know, I was reading another thread on I-bonds, but I have my own sort of, I don't really want to say problem with I-bonds, but maybe we'll go into that on another stream. Mike Cease says, things seem bipolar. Those who have money are buy. And those are barely making it. So it's like a split economy. Yeah, so we talked about, I think one of the things that is an unfortunate result, I guess you could even call it collateral damage of monetary policy, is this creation of a 2-tier society. Now, many of you may be listening to the stream and say that, oh, you're a conspiracy theorist, you're sounding crazy. But I mean, if you actually look at the data, and many big money managers, many big economists on Wall Street are saying the same thing. You know, we always talk about Mohamed El-Erian, which is a very, very well-respected economist on the street. And he sort of says the same things about the ramifications, maybe inadvertently, of very easy monetary policy. Because when the Federal Reserve expands their balance sheet, right, or continues to buy and acquire mortgage-backed securities and U.S. Treasuries, there's about a 90% correlation to the increase in equity prices and other asset prices as well. You could even talk about real estate, but if you think about who owns these particular assets, to Mike C's point, it's usually not the working class. It usually is about, you know, the top 10% of Americans. I think the statistic out there, and I'm sort of going off the top of my head, but I think the top 5% of Americans own about 90% of the equities. So even though the Federal Reserve's easy monetary policy may be keeping people employed, it's sort of making it harder for those people who are employed, who have regular jobs, to acquire the assets that are being inflated. And the people who already own those assets, their net worth is just on a one-way trajectory higher. So I think you're right. It's sort of that old saying, the rich get richer and the poor get poorer. And I think one of the main reasons for that is very lax monetary policy. Hey, Molly says 1923. You can imagine waiting in line for your monies. I don't think I could imagine that. But Molly, good to see you. Hey, Jared Covey is here. Jared, happy Friday, my friend. Jared, today is packed in the city. Tons of traffic, obviously due to the San Gennaro's feast. But we're crossing over East Houston Street now. We are now entering into NoHo, where you're gonna go walk up Mulberry Street. We're actually coming up on one of my favorite favorite apartment buildings in the city. Hey, Diego says iPhone 14 Max Pro. What's up, Diego? Yeah, we're streaming on an iPhone 13 mini. I don't think I'll be getting the Pro. I don't think so. So this is the start of the San Gennaro's feast here. Hey, Action Kid is here. This is Tom. There was a ton of traffic all over. Doesn't matter which neighborhood I went tonight on my scooter. Yeah, Action Kid, I had you up in the office. I saw that, dude. Crazy amount of traffic. Yeah, I always have AK stream up on monitor too. Hey, Ramp 5 is joining late from Astoria, Queens. Good to see you, Ramp 5. Welcome. I see Neil Bell is here. Good to see you, Neil Bell. Dan Zhang says, Tom, several years ago, a kid in China sold one of his kidneys to buy an iPhone. Jesus. iPhone, just like Starbucks, become more of a status thing? Really? That's insane. Well, one of the things I did hear about... Oh, before we go on to that, Dan, did you see that news that I think AT&T is going to have a really hard time upgrading a lot of their customers to the new model of iPhone? And I think we've actually talked about this, because if you think about the acquisition, T-Mobile acquired Sprint. I don't really like to call it a merger. T-Mobile essentially acquired Sprint. And I actually wrote a piece about this. And I think T-Mobile is going to continue to be the leader in wireless. Going to blow AT&T and Verizon out of the water. And that's because the real value in the acquisition of Sprint was not the customers. And every time I would turn on, CNBC or Bloomberg, they'd say, oh, look at all the revenue that they're going to acquire. They're missing the point. The real value that T-Mobile got in acquiring Sprint was all of their mid-band spectrum. And it just so happens that a lot of the mid-band spectrum is what a lot of 5G will run over. So I think their main radio bands that T-Mobile is known for is like their band 71, band 66. But they have a huge swath of that mid-band spectrum. So I think they're going to continue to be the leader in 5G. Hey, PB on the go is here. So hello, Tom, and everybody. New York City looks busy. Yeah, PB on the go. We just left the San Gennaro's Feast. I think that's going to be running for about 2 weeks now. Taxi cabs, Tom, if I hear that Intel is... hold on, let me read that in a minute. Taxi cabs says, hey, Tom, I hear that Intel is to replace some brands with Intel processor for 2023 laptop CPUs. I didn't hear that. Taxi cab, I'll have to check it out. Hey, Denise Ebby says, it seems I am tired a full week. So this is the corner of Lafayette and Bond. And we have the original cobblestone streets here that are quite nice. Mike C says, I need to reevaluate T-Mobile. You're biased from when their network was second rate. Yeah, so I think if you think about it from like a regular wireless perspective, if you try to run an iPhone 11 on T-Mobile's network right now, it's going to be really, really bad. It's going to give you a bad experience because they've been migrating a lot of their, spectrum. And I don't think the iPhone 11 has band 71 or 66. But any of the 5G or the new 5G models, it's going to work flawlessly. So I think a lot of the people that have older model devices that are running on T-Mobile, they're going to say, "Oh, it's horrible. It sucks," which it will suck. But if you have a 5G device, it's going to blow everything out of the water by far. Hey, Gregory's here, a good moderator. What's up? This is random yelling. drink. What does FredEx call it? He says, what does he say? He says random shrieking. Hilarious. The LT products, T-Mobile is developing a network with Elon Musk's Starlink so their phones get data and voice anywhere in the United States. Yeah, I saw that too. So I don't think that it's going to be as broad-based and as, like, the phones will get coverage anywhere in the world at any time, but it's going to be like very, very minuscule. You'll probably be able to, call out for help or something like that, but I did see that too. I think Elon Musk was actually, wasn't there like a big announcement with Mike Sievert, the CEO of T-Mobile? They did like a, not really like an investor day, but a conference announcing it, I think. Mike C says, I might wait then. My part of Central Florida is sketchy with 5G coverage. Copy that. Hey, Charles D says, did Uber slow down the sedan limo business in New York City? So I'm not sure. I really don't know about that. I've been seeing a lot of these. I'm trying to think of the name. They are Teslas, but they're those blue Tesla taxis. I forget the name of the company. It starts with an R. Maybe you guys could help me out in the chat. I actually think here's one up ahead. We'll walk past it, but supposedly this company is gaining a lot of market share too. Hey, Steph Wright is here. It says, hey Tom, good to see you, Steph. Welcome. Yes, Action Kid, that's it, Revel. Has anybody used that service? I think this may be one right up ahead. This guy right here. Has anybody used that service? Julie M is here, good to see you, Julie M. If you guys are enjoying the live stream so far, feel free to leave a like on the video and hit the subscribe button if you're new. We usually go live about 5 days per week between New York City and Miami, and we'd love to have you along for the ride. Yeah, Gothamist, I think you're correct. Lisa's Rivian. No, so I'm not talking about the car company. I'm talking about this specific taxi service. So I'll show you guys right here. Funny enough, it's right here. Revel, R-E-V-E-L. The LT Prods is the conference announcing T-Mobile partnership with Elon Musk was on YouTube. Copy that. Hey, Gus says there might be pushback from Uber and other taxi companies. Potentially. So I know, so whenever I take an Uber out on Long Island, I guess if you drive for Uber on Long Island, you're not allowed to drive for Uber in the city unless you have some sort of special license, I think. Now, don't quote me on that, but I was talking to an Uber driver, and I guess that's what he said. And many of them say it's not worth it to get the license to drive there, so we'll see. Zay Batata is here, have seen the color in their cars, but didn't know they existed. Hey, Roberts says must be warm out. Good to see you, Robert. So here we have the Blue Man Group here at Astor Place Theater. It looks like they have a show tonight. There's a lot of people lined up to see it. Hey, Chon says looks so Soho-ish. Yeah, so we just crossed over from East Houston, and we are walking towards Astor Place. So we are very close to St. Mark's Place here. Once we go up here and make a right, we'll be at St. Mark's. Hey, Sonia C is joining us. Says, hey Tom, how are you? Good to see you, Sonia. Welcome. So going back to we were talking about the housing market a little bit. You know, one of the main things that I look for to see a potential new emerging trend, to see if home prices are really going to start to roll over here, is just how long these homes are sitting on the market, right? Because usually what'll happen, and I think this is why we're seeing that divergence between interest rates going up, but also home prices are continuing to go up as well. And the reason why we're seeing that divergence now, well, let me just preface that by saying I don't think that's going to last for long. I think Q1, Q2, we're going to start to see the effects of interest rates take hold on the housing market. But just because rates go up doesn't mean that people are going to reduce their prices. People will start reducing their prices when their homes are sitting on the market for longer than expected, right? Because it starts to become a really bad look if your house is just sitting on the market. It's sort of like a psychology thing. If you put your home on the market and other people look it up on Zillow or whatever sort of service you're looking at, and you're like, wow, oh wow, look at these guys. And some people are like, wow, this home has been sitting on the market for 400 days. There must be something wrong with it, right? So to prevent that sort of behavior, then people will start to mark down their prices. So last year, homes were on the market for an average of 14 days. As crazy as that sounds, they were. And obviously that was fueled by artificially low interest rates, artificially suppressed rates. But now we're actually seeing homes sit on the market a little longer than usual. So as of the last existing home sales report, it stated that now the average home is sitting on the market for 17 to 20 days as opposed to that 14. So at the current rate, or at the current pace of home sales, it would take 3.3 months to exhaust all supply. Now, if you look back throughout studies throughout history, it generally takes about 4 to 5 months of supply on the market to start to make a material impact. Here's another one. There's another Revel taxi. To start to make a material impact on prices. So many economists are looking for supply to get to right around 4 to 5 months to see any sort of change in price appreciation, which I think is going to come once again in Q1 and Q2 of next year. Hey, Austin Howell 20 is here. Says, good night, everybody. I hope everybody is okay in New York. Good to see you. Molly Duran says, oh my God. I just started watching. All right. Joey Coffee is here. What's up? Says Tom. Hope all is well. Just dropping in to say hello. Joey, good to see you. Yeah, so Joey is the CEO and founder, I believe, of Ame Coffee, which is a local coffee chain, I would say, here in New York. So please check him out, support that. Somebody says, are the Revels comparable to Uber XL in terms of price? Now, I'm not sure. I'm gonna have to do some market research and probably take one. But I don't even know what the pricing would be. But I've been seeing them everywhere. That's the only reason why I sort of brought it up, is because I've been seeing these things around the city all the time. So maybe we'll cross over here. Maybe there's less people here. Gregory says, got a link. So I think we may have a link in the Nightbot. But if you Google Cafe Ame, you'll see it. Or Joey could just post his link in the chat here. Sunny D is here. What's up, Sunny D? Welcome. Always a pleasure to see you. Right, Charles, you're correct. So yeah, Revel is sort of like a competitor to Uber. I know they're not an EV company, they utilize Teslas, but I'm just interested in the pricing comparison as to say, you know, what's cheaper, to take a Lyft, an Uber, or this particular company. Hey, Bit of Wanders, as I just did my first live stream on the new iPhone 14 Pro Max. So how was it? Any updates? Good, bad, indifferent? What do you think? PB on the go says, Tom, how far is it to Long Island? Not too far at all. So technically, geographically speaking, Brooklyn and Queens are both a part of Long Island. So you have Kings County, which is Brooklyn, then you have Queens, and then you have Nassau and Suffolk County. But if you take the Long Island Railroad from Pennsylvania Station, 34th Street, it really depends on where you go. But let's say if you go to Garden City or you go to Massapequa, to Garden City is probably going to be less than an hour, maybe 35 minutes. To Massapequa, maybe an hour, maybe 55 minutes to an hour. And it's not bad. It's a really nice ride, very convenient. And I think it's going to get even more convenient as time goes on, because the East Side Access Project is just finishing up, so you'll be able to take a Long Island Railroad train into the Grand Central Terminal. So for everybody who commutes from Long Island, maybe you work on Wall Street and your office is at Park Avenue or something like that, now you won't have to take the subway. You could just get off right at Grand Central Station, which this should have probably been completed many, many months ago. But I guess better late than never. Hey, Dutchman is here. Good to see you, Dutchman. Welcome. We are now walking uptown past East 11th Street. Meatman is here, so TGIF. Happy Friday to you too. Edward's just started watching, and I'm super addicted. Keep up the good work. Edward, thank you so much. Appreciate it. I trust you're having a fantastic Friday. Hopefully you had a good week. All the major indices finished in the red, but if you notice, the last 30 minutes of the day are power hour. A lot of stocks were well off their lows, which sort of leads me to believe probably the rally will extend to Monday and Tuesday, but I think the general overall broad-based trend of the market remains down. And obviously next week on September 20th, September 21st is when we will be getting or hearing from Fed Chairman Jerome Powell and the Federal Reserve as they set the course for monetary policy. Action Kid, 2 people on a moped. As they set the course for monetary policy. So there could potentially be a 75 basis point rate hike. Actually, let me rephrase that. There's definitely going to be a 75 basis point rate hike, with probably maybe a 30% chance that there's 100% or 100 basis point rate hike, which would be a full percentage point. So I think we need to be cognizant of that. So if we review what we've been talking about, you know, all of the investing grades like Ray Dalio, Stanley Druckenmiller, Paul Tudor Jones, the number one thing that they say is don't fight the Fed. So if we're in a tightening cycle and the Fed is raising interest rates and removing liquidity out of the system, well, that's going to put pressure on equities, and that's also going to put pressure on the housing market. So we need to stay tuned. Hey, Love Super says, thank you for all these walks. Do you really think there will be a capitulation event before the midterm elections? So I think that's a fantastic question. And I was talking to one of my friends who runs a hedge fund out of Chicago. And again, the 2 main criteria that we're looking at that usually happens at all major market bottoms, because this is a major bear market. I mean, many people would say, hey, you know, the S&P 500 is only down about 25%. It's not a major bear market. Oh, but it is. I mean, if you look at the individual stocks, or as I like to say, under the hood of the market, these things have gotten freaking hammered. Okay, you have stocks, individual stocks that are down 70 to 90%. I mean, the carnage out there is just really breathtaking. However, this is what we have not seen. If you look at the CBOE volatility index or the VIX, I still think we're right around 27. Now, if you look back at historical bear market bottoms, most recently in 2020, obviously for the COVID bear market bottom, the VIX was at 80, right? That almost matched where we were at the great financial crisis in 2008. If you want to take it back even further, if we do a quick review of what happened in 2018, well, in 2018, and I remember this quite vividly because I was trading it, this was Christmas Eve, and the market was just getting hammered. It was so bad across the board. It was Christmas Eve. I think I was actually on the Long Island Railroad. The volume was turning over like gangbusters, and the VIX was going to Mars. Put premium, I think, was up 400% in a single day. So anybody that was trying to buy insurance on their portfolios, they were paying out the you-know-what. And that is the sort of action that you want to see at a bottom, right? Put premiums go to the moon, the VIX goes to the moon. And on that day, Christmas Eve in 2018, the market bottomed, right? We haven't seen that yet. So it's been more like a slow grind, this bear market, where about for a year now, I think we put a top in the S&P 500 on January 4th, I think. A couple days after New Year, we put in a top, and we've just been on sort of this slow grind, chop fest down, which sort of leads me to believe I think we have one more leg lower, because the VIX is at 27. And again, usually at very historic bear market bottoms, the VIX goes to Pluto. Probably, I would say at minimum, we need to get up to about 55 or 60 on the VIX. Also, the put to call ratio really needs to get hammered, really needs to get stacked on the put side of the market. So obviously, puts are a derivative product on Wall Street where it allows you the right but not the obligation to sell 100 shares of an underlying security. Calls are a derivative contract with a bullish directional bias that allows you the... Ooh, it looks like something happened here. Is he getting pulled over? Oh, he's just going around. I thought he was getting pulled over. That allows you the right but not the obligation to purchase 100 shares of an underlying security at a later time, at a certain date. So you really want to see everybody starting to flood the put side of the market or buying insurance on their portfolios. And that usually signals a bottom. So do I think we're going to see that after midterms? I hope we do. I hope we do. Oh, this is a good Korean barbecue spot, everybody. Barn Jew. And it's right here at Union Square. Now, it's not as good as the ones that we talk about in Koreatown, but this one is very good. I've been here a couple times. Hey, Patricia Ivory, this is Tom. I was in this area today, Union Square, seeing some of my clients. Very nice, Patricia. I trust those meetings went well, hopefully. And happy Friday to you. Gus says, is this Union Square? Yes, this is Union Square. Hey, Big Picks is what if we ignore the Fed? God Ott says, Tom, he's censoring me. So here's an interesting statistic out of Fundstrat. Now, Fundstrat is the firm that is owned by Thomas Lee. And I like Tom Lee a lot. I think he's a good guy, very smart guy, sharp guy. So this is what his research said. So we are potentially, and again, this is potentially, so let's put our political biases aside and put on your financial analyst thinking cap as opposed to political analyst thinking cap. And here's why. So if you look back at previous stock market performance, and if we try to overlay a potential positive political bias what the data shows us is that market performance is best when we have two specific criteria. And I'd like to review that right now, if I may. Number one is when we have a Democrat for president. So we have that right now. We have President Joe Biden. And number two is when we have Republicans controlling both houses of Congress. Okay, again, let's not sort of get political here. Let's focus on this as a financial analyst standpoint. And that is very, very possible. We could have that exact situation after midterms, right? We have a Democrat as our president, President Joe Biden. And if we have the red wave, as they call it, we could have Republican control of both houses of Congress. And historically, that has been the magic elixir for absolute turbocharged gains in the market. And it's very possible that we may get that. Just had to let the train go by. Oh, look at the dog. I used to have this exact dog, Yellow Lab. So here's the thing about yellow labs, though. As they get older, their back legs tend to go out for whatever reason. I think they're very prone to arthritis. So it was really, really sad the last 2 years when I had my yellow lab, because it was so hard for her to walk. It was really, really bad. So anyway, this could potentially be setting up for something very good in the market. Obviously, right now it is a very, very brutal bear. But look, after midterms go by, if we get a flip, I think things are going to be looking on the up and up. Oh, Gregory says yours is 14 and they're going through that too. Dude, it's a heartbreak, man. It's really bad. Now, so I remember, and this was such a long time ago though, Greg, when we took my dog to the vet, supposedly you're supposed to give them fish oil. Oh, Golden's Dawn says, Tom, I also had a yellow lab, same with the legs. Dude, I don't know what is up with that. It's so sad because they'll live a very long life, but right around 9.5 to 10 years old is when you could start to see that problem develop. And I remember the first time when I noticed it in my dog, she had I don't know, it was weird. She was walking up the stairs like almost sideways, and you could tell it was hurting to walk up the stairs. It was horrible. But anyway. Yeah, Gregory's like, I could try the fish oil. I would ask the vet first, but I just vaguely remember that. Wow, check this out. Beautiful view of the Empire State Building here on East 21st Street and Broadway. Fantastic view. Mike sees his Tom, our German Shepherd got hip dysplasia later in life. It was so hard to watch. Dude, it's a heartbreak, man. Now, my Beagle, so I have a Beagle now, and my Beagle is getting really old, but doesn't have any of those problems. None of those problems that my Yellow Lab had, like zero. Maybe like a couple like weird growths on the body, but nothing like where it's in pain or anything. Big Pick says CBD is also great for dogs. Yeah, Golden's Dawn's like had to carry him towards the end. Couldn't go up the stairs anymore. Yeah, that's sort of the same thing that happened to my dog. We had to move her bed downstairs. But the weird thing about dogs is they become so ingrained in habit that my dog was so used to sleeping upstairs that she would like try to walk up the stairs and she would like be falling down the stairs. So I think we actually put a gate up to prevent her from trying, but yeah, it's tough. Anybody who has a yellow lab out there could definitely relate to that. Yeah, Dusty Cole, what was up with that? I think a couple of you guys sent me that story about the 2,000 or so beagles in Virginia. That was a crazy story, dude. All right, this is definitely a 10 out of 10 view of the Empire. I like the classic white with the twinkling lights, looks fantastic. The LT Prods, they have physical therapy for dogs, where they could walk on treadmills and in water to take the weight off the hips. Love that. Deja Vu says you raised 3 huskies down to 1 now. So my sister has a husky. So the thing I love about huskies is, I'm not sure if all of them have this, but my sister's dog has 2 different color eyes, and they're insane. It's like a very deep blue and like a blackish purple. It's really cool. I'm actually gonna post a picture in the Discord. I'll show you guys. But yeah, huskies are great dogs too. Super energetic though. I mean, you gotta really, really wear those guys out. Hey, Jorge is here, good to see you. Roy S, what's up, Roy? Good to see you. All right, I'll show you guys the Flatiron building. As you know, the scaffolding is still up here, unfortunately. Hopefully it'll be down soon. But this is the very famous Flatiron building. Oh, Western Mass Dave says, Tom, I had a Great Dane St. Bernard mix who also had a leg problem. We built ramps, etc., but eventually had to put her down or put her to sleep. Yeah, dude, it was yeah, Western Mass Dave, it's tough, dude. It's definitely not a good time. Sonny D says, I have seen a few huskies like that one. One darker eye and one light color eyed, really cool. Yeah, they're definitely an interesting breed for sure. All right, team, now we are coming up on Italy. The last thing I wanted to cover today, I really wanted to make it light, but I think we need to keep our eye on the yield curve in general, because it almost seems like as the days go on, that yield curve continues to get more and more inverted. So again, I'll revert back to the Twitter thread that I posted. You'll notice how I posted a chart of the yield of the 30-year, the 10-year, the 2-year, and the 1-year. And it's just really, really badly inverted. Now, usually you get an inverted yield curve leading up to a recession. And many people are still in this debate period of, are we in a recession or are we not? I think you guys know what my thoughts are. I think we are in a recession. But at the end of the day, I think that now a lot of that conversation, unfortunately, has been politicized. Mike uses the 2 and 10 inversion hit 40 basis points at one point today. Yeah, it was. It's bond market's signaling it doesn't like something, and it's signaling a lot of illiquidity too. Now, that is my biggest fear of. You know, we always talk about this particular black swan event, right? And I think when we'll know it's all over when the debt market blows up. And usually, well, I would predict that you would see this just uncontrollable spike in yields, right? You'd see the 10-year treasury yield just going off on one. Because, you know, as you know, the relationship between yields and prices. You know, as bonds sell off, yields go up. And that's sort of where the Federal Reserve has been coming in here to sort of backstop that market by buying U.S. Treasuries and buying mortgage-backed securities to sort of add some stability. And the debate on Wall Street is how long can that behavior go on, right? Because essentially, it's almost become like a Ponzi scheme in some senses, right? Not to get too negative, but if you always have an operator out there that is going to backstop the market by buying these treasuries and adding liquidity to the market, well, are we going to be in a situation when where that has to happen in perpetuity to avoid something cataclysmic? I don't know. I think many people think we've already reached that, and that we may be going down the path of, let's say, Japan or something like that. So this gelato place is always packed. Check this out. Anita Gelato. Wow, I think this may be one of the longest lines we've seen here at this place. Hey, Mimi is here. Says, hey Tom, did you see, by the way, that Will was rated #1 as far as the cheapest housing in the United States? I think maybe there was a typo there, but Mimi, type it again. Wow, Mike C says Jeffrey Gunlock is now going long bonds. Really? Here now says I like short the following till Santa Claus rally, Roblox, Teladoc. Yeah, so Teladoc was one of those really high flyer, very high beta growth stocks, but Teladoc is just absolutely falling apart. Their earnings is horrible. They've missed, I think, the past 3 or 4 quarters, and the stock is absolutely clocked. And if you guys remember, this was right about the turn of the year. I wrote in the newsletter that, you know, this irrational exuberance can last longer than you think, but the first particular stocks to get hammered during the beginning of a potential trend change are those very high beta unprofitable companies. So once interest rates start to increase, those are the first ones to go. Everybody dumps those out the window. You know, it's like throwing the baby out with the bathwater. Those are the ones that get thrown out the window the first. And then you have sort of like the kings, as I like to call them, that make up the vast majority of the weighting in the index. So what caught a lot of people off guard is Main Street. You know, they'll look at the stock market after work and say, oh, the S&P 500, you know, is down fractionally, no big deal. But if you look under the hood in the market, you know, you were seeing in January and in February, all of these individual stocks down 10%. It was crazy. All of these high beta growth stocks down 5%, 10% every single day. But your Microsoft, your Alphabet, your Apples were maybe down fractionally, right? Because it's always those ones that have good earnings, solid fundamentals that really crack last. However, if you think about how the market is set up in terms of the S&P, that it's a market capitalization weighted index, you know, you have Apple that makes about 7% of the indice. Then I believe it's Microsoft, Amazon, Alphabet, Berkshire Hathaway, Meta, on and on. So once those crack and those 5% a day, then the S&P falls apart. And that's when Main Street really knows it, right? So I think it's important to stay in tune with the market, as I would say. But if you guys want to read about it a little bit more, if you scan the QR code on the screen and punch in your email, that will drop a link to the free newsletter that I write usually every other week. We're going to get back on track here very soon. where we write about not only the US equity market, but emerging markets, fixed income. We talk about real estate. So please join us there by scanning the QR code, punching in your email, and you will be signed up to receive all of my equity research for free. Gus says, Tom, speaking of Microsoft, I saw an article that they're trying to acquire Activation Blizzard. I think they already made a bid for them, didn't they? I think it just has to go through approvals. Now, I could be wrong, but I think it's just going through regulatory approvals. But I could be wrong on that. You know, the biggest acquisition on Wall Street this week, I believe, was announced yesterday, Thursday. I think it was actually announced Thursday before the market opened, that Adobe, ticker symbol ADBE, is buying Figma for $20 billion, which surprised many people, including me, because usually when markets are getting hit, companies will look to acquire other businesses, but they'll usually get a pretty good deal and get to acquire at lower valuations. But I believe they're doing about $400 million worth of revenue a year, but Adobe acquired them. Wow, check out this view of the empire. But Adobe acquired them for about $20 billion. So that's about 50th of the sale price. 1/50th of the sale price. Now, granted, the company is pretty solid in terms of its gross margins. I think they have about 90% gross margins. And I think that's maybe one of the reasons why it was acquired at such a high valuation. But at the end of the day, from what I was reading, Figma was making a pretty big dent in Adobe's revenues. So I guess at some point, if you can't beat them, might as well buy them, right? So we'll report on that more. We'll see as the deal comes, I guess, to fruition, as you could say. Yeah, USA says Adobe is quality. Adobe is a very quality company. Big pick. Good to see you. You know, now that they took down the scaffolding, you could see pretty much an unobstructed view of the empire, which is fantastic. All of this here used to be all scaffolding, the entire thing. Hey, Joan is here. Good to see you. Joan says, hey, Tom. Sean, welcome. All right, we are approaching Koreatown now. This is 30th Street. So Koreatown is on West 32nd. Hey, FredX, good to see you, man. We're glad you could make it on this Friday night. Trust you had a good one. Positive week. You know, tomorrow I actually make a trip. I may make a trip out to Greenpoint, Brooklyn, and check out that neighborhood a little bit. I actually used to live there. It was one of my favorite sort of neighborhoods in New York. Maybe I'll try to get some footage of it, but I think I may spend the day out there most of the day. And then maybe right around 2 or 3 o'clock in the afternoon, come back into the city and check out the San Gennaro's Feast, because right now it is crazy packed. We started off the stream down there, Canal Street. Hopefully it's a little less packed. Hey, Cayenne Pacific says Adobe makes great products. I use Photoshop and Premiere Pro on a daily basis. I just wish they didn't do subscription services and that they weren't so expensive. Yeah, well, that's why they're such a great company, is because they do subscription services. You know, one of the things that Wall Street really likes to see is very predictable revenue streams. So back in the day, you would just sell one software license, and whenever the new version would come out, you know, people would have to go to the store and then buy the next version of the software. But now, if you are a company and you can distribute your software via the cloud, right, or a SaaS model, software as a service, that's going to be very, very lucrative for that business, because now your revenue streams are extremely, extremely predictable. So one of the main metrics on Wall Street that a lot of major banks and investors look at when evaluating a SaaS company is the dollar-based net retention. So Adobe has extremely, extremely high dollar-based net retention, because it's one thing to acquire a lot of customers, right? It's one thing to say, you know, we signed up this many customers this quarter, but what if they just constantly churn and they cancel their subscription after 2 or 3 months, right? Well, that's not a sustainable business. But if you can get somebody to pay $50 a month and you have 97% of those people that don't cancel their subscription, well, Wall Street is going to assign a very, very big premium valuation to your business, especially if your margins, your gross margins, are extremely high. So Adobe's gross margins, I'm not sure exactly what they are, but I'd assume they're probably over 80%. Because Figma's gross margins were about 90%. So this is another shot of the Empire State Building here. We'll go over to 5th Avenue and then we'll walk up 5th and then down past the Empire. Hey, Lizzie Hatch is here. What's up? Just hey everybody, happy Friday. Good to see you, Lizzie. Ryan Royal says a lot of Adobe products have become industry standards InDesign, Acrobat, and Photoshop. Yeah, Adobe is definitely a standout company. Now, the stock got hammered after the acquisition, mainly because I don't think Wall Street liked that they paid potentially a premium valuation. But then at the end of the day, I don't want to, you know, go out on a limb and said they overpaid, because, you know, I'm sure the people at Adobe did their due diligence a lot more than I did. So, I mean, if you're going to acquire a company for $20 billion, you probably must have done a lot of due diligence. So this is Koreatown. Kathy Lyons is here. The LT Prod says I got a deal that was half off. Wow, the Adobe Master Suite last year. That's awesome, dude. All right, let's see if we could squeeze through here. All right, we are good. So we're coming up on 5th Avenue, and then we'll walk up 5th. We very rarely walk up 5th. We've been walking up Broadway most of the time. So we'll walk up to the Stephen Schwartzman building, the founder of Blackstone, who is very famous for making all of his money in leverage buyout deals, or LBOs. Now, BlackRock and Blackstone has also been buying up a lot of real estate, especially in the single-family market, to use for rentals, especially during the pandemic, when there was that very brief crash in real estate and interest rates were extremely low. So a lot of institutional investors were able to lock in extremely low interest rates, probably like a 2.8%. Now, I'm not sure the exact float of all of the... Oh, FredEx, look at this. There's always thousands of rats here. It's like this vacant lot here on 32nd Street. Let's see if I could spot one for FredEx. There's one right there in front of us. Now, I think the rats will continue to be here until they could build something. Ooh, look at that guy. He's actually not too big. He needs some food. Ooh, look at them. There's like 5, 6 of them. Ooh. Oh, they're fighting. FredEx, that has to be 2 shots for the rat fight. But yeah, I'm gonna have to do some research to see what percentage of sales was institutional sales as it pertains to the real estate market. I think it may have been 17%, but I'm not sure. I have to go back and look. Maybe I'll do that this weekend. I'll make a note of it. All right, so now we are near one of my favorite Korean barbecue restaurants in New York. FredEx says he'll allow it. Love that. Yeah, FredEx, we gotta make an adjustment. If you see a rat, that's a drink, but if we see a rat fight, that's 2. I mean, that has to be 2. So this is Baekjung, which is my personal favorite Korean barbecue restaurant in New York City. If you haven't been here, it is a must. But check this out. I think this is definitely a 10 out of 10 on the Empire tonight. Koreatown always has the best views of the Empire. Mach says the rats in New York City are elite. Yeah, the rats, I would agree with that. The rats are definitely something else here. Hey, E is here, says I had Korean, I heard Korean chicken is good. It is, really good. There's 2 places in particular that are really good here. Number one, I would say the number 1 Korean fried chicken place is Pelicana Chicken. Now, I'm not sure if many of you have been there, but it is in, I forget the name of the food court, but it's right in between 5th Avenue and Broadway on 32nd. It's on the 2nd floor of that main food hall. It's Pelicana Chicken. It's a little bit expensive, but it's worth it. It's 100% worth it. Yeah, USA says Korea chicken is good. Mach says Pelicana is good. Pelicana is fantastic, man. The only thing is I can't eat it too much. I try to limit myself to like maybe once every 2 months. However, if you don't want to spend too much money, there's also another spot near Pelicana Chicken, BBQ chicken, but it's not as good in my view, but it's a lot cheaper. I think you can get like a basket for, I think like $10, maybe like $9.90, $9.99. Yeah. TL says, bet you could find any plate from anywhere in the world in New York. You're right. We can pretty much find any cuisine in the world here. That, you're right. Hey, Lizzie, thank you so much for the support. Appreciate you very much. Hey, 21 Jump Street says, hey, Tom, can the Queen's funeral slow down trading on Monday? I don't think it'll make a material impact. But is that Monday? I thought it was this weekend. But yeah, I actually have a friend who is flying there for the funeral to pay respects and the like. So definitely a big shout out to all of our friends in the UK. Oh, Mach, it is Monday? I don't know if it'll necessarily have an impact on trading, but... So team, I always show you guys these 2 restaurants, but I think it's worth it. So Take 31 is right next to Her Name is Han, but they're the same owners. So the same owner of these 2 restaurants. I think I like Take 31 a little bit better, but these are, in my opinion, 2 of the best Korean restaurants in the city. Now you could see the massive crowd lined up outside Take 31. Now usually during the weekdays you could probably get a table no problem, but on the weekends, especially now during New York City Fashion Week, now that a lot of kids are back in university, it's probably going to take you quite a while to get a table. But here it is, Take 31, and then here is Her Name is Han, and they're actually owned by the same owner. And these are fantastic places. Extremely, extremely good places here that I would recommend. Hey, Miss Bash is here. Yeah, we were streaming New York. We were streaming the Little Italy earlier today. So we started off the stream in the office on Canal Street. Miss Bash, good to see you. Gus says, Tom, you should also do some photography. I'm not sure if I'm not that good of a photographer. I don't know. Maybe. Hey, Mimi is here again. Good to see you. If you look all the way down here, you can actually see a little piece of the Hudson Yards. And I believe the KPMG headquarters in New York City is actually moving to the Hudson Yards too. We'll have to check that out. Hey, Jackson is here, says hello from Brazil. Quinn says it will be a bank holiday in the UK on Monday. Yeah, I could imagine everybody in the UK is probably not going to go to work on Monday if it's the funeral for the Queen. Hey, Hellcat is here. Says hello, Tom. Happy Friday. Thank you, Hellcat. Happy Friday to you too. We are on the corner of East 31st Street and 5th Avenue, looking at a beautiful view of the Empire State Building. Oh, GM Workstations, just saw a rat outside Keen's Steakhouse last time I was there. It grossed me out. So has anybody been to Del Frisco's? At my previous company, that was my go-to spot to take clients out for like a closing, like right when we were about to close a deal, like when the deal was pretty much done, that was my spot. We actually had a running joke in the office that if Tom's going to Del Frisco's or he's requesting T&E for Del Frisco's, there's going to be a deal that's closing on the horizon. But that place is awesome. I miss those days. I'm no longer at the company anymore, but before the pandemic, that was my spot right there. It was pretty close to the office too, on Avenue of the Americas. It's right across the street from Radio City Music Hall. Yeah, Life, Liberty, and Guns, since we love Del Frisco's. If you want to close the deal, you got to go to Del Frisco's, man. Del Frisco's is a great place. Miss Bash says, yes, Del Frisco's is good. Yeah, so you guys know it. Del Frisco's is fantastic. Neil Bell says, Tom, a lot of businesses in the UK are closing for either all or at least part of Monday. I mean, it's definitely understandable. So, hey, maybe it will have a little bit of an impact in terms of trading volumes, but I think over the long term, probably not too much. So this is 33rd Street and 5th Avenue, outside of the Empire State Building. Now, I believe LinkedIn, their corporate offices in the Empire. Also, I believe a very notable cybersecurity company, Palo Alto Networks, is also there in the Empire State Building. Hey, Life, Liberty, and Guns, Tom, we were there a few weeks ago. Awesome.
Oh, shit, that one.
Yeah, Del Frisco's is a fantastic place. A little pricey, but there is a lunch thing. If you go there for lunch, it's not too bad. I think it's like $40 if you go there for lunch. Yeah, Dan saying he's like, Tom, one day we got to do a food stream. Hey, Frazier says, go to Alberta, Canada. Said to be rat-free. I'm down to go to Canada. What do you guys think of this shot of the Empire? Thumbs up, thumbs down in between? Not too bad. This is directly outside the main entrance. CT, what's up? If you guys are enjoying tonight's live stream, ooh, this guy's a really nice longboard. Feel free to leave a like on the video. Also, hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami, and we'd love to have you along for the ride. We'll walk straight down 34th Street. Roy Wes, what's up? I know, sunshine after rain is like, Tom, you got to bring the board back. I do have to bring it back. You know, I can promise this. I will make a guarantee. We will have at least one more skateboarding stream before there's snow on the ground. That I can guarantee. I cannot guarantee when we will do that, but I can guarantee it'll at least be one or two. Yeah, photos from around New York says today I heard a car backfire loudly so bad that it hurt my ears. I never understood that. I mean, maybe I'm not a big car guy. You guys know that I'm not a big car guy, but what's the point of making the car sound so loud? Does it mean something? Because if I can hear it and I could barely hear myself think, does that mean the person who's driving the car they must hear like 10x the amount of volume that I'm hearing. So how do you even drive the car? How do you go anywhere if it's just ridiculously loud? I don't get it. And it may sound super ignorant, and it probably is. I'm not a big car guy at all. Excuse me. Ray 2076 says, do you know Cash Jordan? I don't know him personally, but absolutely I know of him. I watch a lot of his videos, but I don't know him in person. He seems like a really cool guy, awesome guy. But yeah, I know of him, but I don't know him in person. Somebody says loud exhaust gives you more power. Hilarious. Hey, Erica is here. Good to see you, Erica. Disney Matt says, hey, Tom and chat. Back from work. Ooh, oh, wow. Super busy today. How's everybody? Disney Matt, I was busy as well this week at work, but today was a very good day for me because a lot of my customers actually came through and paid me a lot earlier than expected. So I was sort of telling the group that usually when you get into enterprise sales, or if you have a small business, or even very, very large companies, they don't just buy things and pay for them that day. They usually have something called net terms. So I'll usually go into contract with my customers and I'll give them 30-day to 60-day net terms. This nice Tesla taxi here. But yeah, I checked the bank account and everything came through. And I think that's probably because a lot of businesses are doing their budget expectations for next year. So as they do and calculate budgets for next year, maybe they say, look, we're gonna pay up all of our outstanding invoices and POs. So today was a good day. I wasn't expecting that. So that's gonna allow me to get a lot more aggressive for the end of the fiscal year. Because I had a ton of AR outstanding, like a lot. All right, team, we are outside of Macy's, the beautiful Macy's. Now, there's one thing I'm looking forward to, and I'm really looking forward to doing the live streams during the holidays. And if you guys have been watching the live streams, Walks on Wall Street, since last year, they have windows for Christmas right here. And I'm extremely excited about that. Now, speaking of the holidays, has anybody seen in the grocery stores already, they're bringing out the Thanksgiving stuff. I was in the Stop and Shop this morning, picking up the paper, and there was already Thanksgiving stuff out. I mean, that's a little bit early. I mean, usually, obviously if there's Halloween stuff out, I get it. We're about a month away, but Thanksgiving stuff? Maybe a little early for that. Polo says, hey Tom, do you have a multi-family home in Florida? So technically, yes. So here's what I did. My home, when I bought it, it was zoned as a legal single-family home, right? So it was a single-family dwelling. However, the way it's set up, many homes, so my house was built in the 1950s, 1954 to be exact. So many of those old classic Florida homes that are just on concrete slab, 4-bedroom, 2-bathroom, the whole front of the house is like a Florida room. That's what they call it, like a big wraparound Florida room. So that was all redone, and there's a separate entrance, and it just so happens where that separate entrance is, there's the bathroom and a bedroom. So I was able to go to the town and get a legal 2-family, right, or a duplex technically, so I could rent it out. If I wanted to rent it out, like have a tenant on one side, I could. Right now I do Airbnb, it's a little bit more lucrative, but yes. So there's a lot of homes down there in Florida where it's very easy to do that conversion, because the Florida rooms, I guess you could also call it a mud room, I guess. It wraps around almost the entire perimeter of the house. And depending on where all of like the water hookups, like for the bathroom, you could just blow down a wall. Or if you're lucky enough to have the entrance of the bedroom there, you could just zone it as a legal, duplex. And those properties cash flow rather nicely. Hey, Cosmo Scary, what's up? Cosmo, happy Friday, dude. Good to see you. Cosmo is one of our great moderators. If anybody wants to check out like really well put together, well thought out, well edited videos of the city, that's the guy that you gotta go to. So he's our moderator. We're happy to have him as a moderator on the channel. So please check out Cosmo. Really well done. Different style videos than we do here, as opposed to the live streaming. Cosmo does a really good job with editing really nice videos. So please check him out. I enjoy watching his videos. Michael says, what camera is he using? We are using an iPhone 13 mini to stream live. $2,000, this is more like corporate housing. I hear is lucrative, but don't know anything or anybody doing it. Corporate housing. Well, I do know of some companies, especially in upstate New York, where they have a lot of employees that are here on like an H-1B visa or a J-1. So what they'll do is they'll take some of the cash on the balance sheet and they'll just buy single family homes and rent out those homes, or house hack it, to their employees that are here on like a visa. And I think that's actually a pretty good idea. I know of a couple companies in Ossining, or Ossining, I don't know how you pronounce it, that are doing that, where they'll buy, let's say, a 5-bedroom, 3-bathroom home. And if they have 5 interns coming, they'll either do an automatic payroll deduction for the property, or they'll just say, okay, give us $500 a month and you can rent a room. It's actually a pretty ingenious idea. Lemonade, good to see you. So we are walking up Broadway. Hey, Gary is here. Good to see you, Gary. Jessica and Lisa says, hey Tom, would you rent a house in California? Or rent it out, debating on what to do? So for me personally, I don't think I'd ever buy anything in California. Mainly just because I don't really have any family there. And I don't really even like doing business in California. It's just a little bit of a headache for me. But then again, I'm not from California. I don't know too much about it. But if you have a spare property or you live in a duplex now, yeah, I would go for it. I would rent it out. The thing about rentals, you got to be really, really careful where you buy, because, you know, I have some friends that I used to work with that were, you know, former salespeople I used to work with, that have homes out on Long Island where they're dealing with squatters, right? So the renter laws in New York are really, really horrible for the property owner, really bad. So God forbid if you get a squatter, you can never get these people out, and they'll live for free for years. You know, I have a friend that has a squatter since 2020. It's almost 3 years now they're living there in his place for free. And him and his family and his kids live on the bottom floor, and he has to see these people every day, right? So if you're gonna use real estate as like an investment to, you know, as like a cash flowing piece of property, I think you gotta make sure this specific jurisdiction in the municipality that you're buying in is going to have very, very favorable renter laws in favor of the landlord. If you're starting off and you're a small business and you're not extremely well capitalized. But that's just my opinion. So. Melissa White says, why can't he evict him? So he is in the eviction process, but it takes a very, very long time. It's not like, you know, they send the sheriff there and they throw him out. It's a very, very drawn out, laborious process that costs a lot of money. Hey, Polo Dreams E2000 says, hey Tom, I'm a New York City guy that just bought a house in the country of Texas, 5 acres, so I can Airbnb it. Funny. You know, the thing about Texas, I've had a couple friends move there. One of my buddies bought a place down there. The thing you got to watch out about Texas is the sticker shock on the property tax. So even though they don't have a state income tax there in Texas, you know, sometimes the property taxes can be nuts. I mean, maybe not as nuts as like Nassau or Suffolk County, but pretty nuts. You know, just to give you guys an example, I was looking at homes in Massapequa, New York, and in Lindenhurst. I'm not sure if maybe some of you know about them, those particular neighborhoods or not. This is Joe's Pizza. This place is always packed. There's actually a Joe's Pizza down in Miami, Florida. Anyway, so a home in the range of about 550 to 600 in Massapequa, Lindenhurst, those type of neighborhoods. All of them came with Merrick as well. All of them came with the property tax bill anywhere between $15,000 and $20,000. I think one of them that was like like 700 was like a $26,000 property tax bill. I mean, how do people even do that? I mean, after 30 years, you've pretty much eroded all the equity in your property with the taxes. So I don't know. I mean, things are getting crazy. Big Picks is Texas real estate. They have good cap rates. Oh, Teresa Diaz. 4 million live in LA. Hey, Jessica and Lisa, thank you so much for the $2 donation. You are way too kind. I appreciate the support. Hey, Deborah says my parents left Massapequa when they retired because of the taxes were so high and the Long Island utility rates. Yeah, I mean, that's a big problem for a lot of seniors, right? Especially, well, I think one of the things you could apply for is like a STAR benefit, I believe it's called, where you get a little bit of a tax break. But still, I mean, if you're paying $4,500 a year for property taxes and you're a senior and you're living off of a fixed income, you know, or especially living off of Social Security, it's tough, it's difficult. And, you know, a lot of native New Yorkers are complaining that they're getting pushed out and they can't afford to buy a place where they grew up because the burden of the tax is just so high. So it's definitely a big issue. Gary Carpenter says, I own one because it's been inherited. Copy that. That's awesome. Love that. Oh, Lizzie says, Tom, my husband is a veteran, 100% disabled and gets taxes reduced. Well, thank your husband for his service. I appreciate it very much. Thank you for your service. Thank you so much. The LT Proj is my neighbor pays $10,000. Wow. CT says, Tom, taxes are like that in Bergen County, New Jersey, where I live. $15,000 to $20,000 a year. Oh my God, dude. Yeah, that's crazy. I think New Jersey actually may be worse than New York. I'm not sure, but I think it may be worse. Similar to worse. Yeah, shadows like school taxes on Long Island, they're criminal. I mean, at the end of the day, I think, you know, if you take into account like a district like Jericho or Oceanside, I think those are the two. I think they may be one of the best school districts in the entire nation, actually. But yeah, it's ridiculous. The tax burden is crazy. You know, one of the things that I've been saying is that I think a lot of people who bought homes last year are going to be in for a rude awakening when they get their property tax bills for this year. Because remember, when you buy a piece of property, you pay the taxes the first year on the previous appraisal value, and then it re-rates to the new value. And that could really freaking hammer a lot of people. Hey, Monica B is here. What's up, Monica? Welcome. Hey, Bit of Wanders says, my plan is to live in Kentucky, cheapest chips. Love that. Oh, it is. I think it is Mexican Independence Day. Is that correct? I'll check out the one Vanderbilt. So happy Mexican Independence Day to all of our Mexican viewers. It's a good day for it. It's a Friday, headed into the weekend. Lizzie says he's good. He's retired from the post office, but I continue to work. Copy that. All right, I got to show you guys Bank of America, because Bank of America actually warned of a coming liquidity crisis earlier in the week, which we talked about. Those credit markets could potentially be locking up, potentially prompting the Federal Reserve to step in here. But this is the main Bank of America tower. And this is the Salesforce Tower. So we'll cross over to Bryant Park, and then I think we'll call it a night, everybody. I totally lost track of time. We've been streaming for over 2 hours now. So if you guys enjoyed the live stream, feel free to hit the like on the video and subscribe to the channel if you're new. We'll be live tomorrow at 8:30 p.m. Eastern, and we'd love to have you here. So Monday through Friday, We usually have a specific topic as it relates to the financial markets. Today we talked about the housing market and how the 30-year mortgage rate is now over 6% for the first time since 2008. We also talked about existing home sales fell for the 6th straight month. But at the same time, year over year, housing prices actually went up. However, if we look on a month-over-month basis, we're actually starting to see for the first time in over 2 years that home prices are just starting to sell for below asking price. So I think as rates continue to go up, you're going to have more compression, PE compression as it relates to equities, and more price reductions as it relates to real estate. So thank you for joining. Andy, appreciate it. The ABX girl, Lizzie, Bezita Lopez, Gary, the one and only Western Mass, Dave, Deborah, GX72, E Monica, appreciate you, Bit of Wander, Kathy Lyons, Austin City Limits, all of our moderators. And to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. Have a fantastic weekend, everybody, and we will see you tomorrow at 8:30 p.m. Eastern Standard Time, or Eastern Time. Subscribe if you're new, and we'll see you tomorrow. Enjoy the weekend, everybody. Take this time to de-stress. Get ready, rest up for the week ahead on Monday. I'll see you later.